This voice is taken from an article with the title, How Does the Seasonality Factor Affect Certain Currency Pairs?, which has been published on TRADERTALKSNET. Seasonality is a well-known factor in the forex market that can have a significant impact on certain currency pairs. Seasonality refers to the tendency of certain events or factors to occur at certain times of the year. In the forex market, seasonality can be seen in the form of different economic or political events that can cause certain currency pairs to experience increased volatility. For example, the US dollar is usually stronger during the months of December and January due to increased holiday spending in the US. Seasonality can also be seen in the form of certain currency pairs that tend to rise or fall at certain times of the year. For example, the Australian dollar usually tends to gain strength during the summer months due to increased demand for the currency from tourists. Similarly, the Canadian dollar tends to be stronger during the winter months due to increased demand from foreign investors due to Canada's booming energy sector. Seasonality can also be seen in the form of certain currency pairs that tend to react differently to certain economic events. For example, the euro tends to gain strength when there is economic uncertainty in the US, while the US dollar tends to gain strength when there is economic uncertainty in Europe. Similarly, the Canadian dollar tends to gain strength when there is economic uncertainty in the US, while the US dollar tends to gain strength when there is economic uncertainty in Canada. The seasonality factor can also have a significant impact on certain currency pairs due to differences in the economic cycles of different countries. For example, the US dollar USD tends to be stronger during the summer months due to increased demand for US goods and services, while the Japanese yen usually tends to be stronger during the winter months due to increased demand for Japanese goods and services. Similarly, the Canadian dollar usually tends to be stronger during the spring months due to increased demand for Canadian goods and services, while the Australian dollar usually tends to be stronger during the fall months due to increased demand for Australian goods and services. Overall, seasonality is a well-known factor in the forex market that can have a significant impact on certain currency pairs. Seasonality can be seen in the form of different economic or political events that can cause certain currency pairs to experience increased volatility, as well as in the form of certain currency pairs that tend to react differently to certain economic events and in the form of differences in the economic cycles of different countries. As such, understanding and monitoring the seasonality factor is a key part of successfully trading in the forex market.